Stock market crash. Dow dives 500 points amid tariff tensions, job woes. Imagine waking up to a stock market that's taking a nosedive, all because of some not-so-great news on jobs and a new round of tariffs from President Trump. It's like when you wake up to find out it's raining on your picnic day. Nothing goes as planned. But here's where it gets controversial. Trump fired the head of the Bureau of Labor Statistics after they released a jobs report that didn't paint the picture he wanted. In his social media posts, he claimed that Erika McEntarfer, the BLS Commissioner, would be replaced by someone more competent and qualified, even going so far as to suggest that the government's jobs numbers had been tampered with for political gain, without any concrete evidence. The July jobs report indeed came in lower than expected, adding only 106,000 new jobs over the past 3 months, despite unemployment staying steady at 4%. This discrepancy between job creation and unemployment can be confusing, especially for beginners. Think of it like having a full plate but still feeling hungry. Something seems off. Now, let's talk about those tariffs. Trading partners around the world, such as Switzerland and Taiwan, are holding firm and hoping to negotiate with the U.S. Instead of backing down, Switzerland is facing a 39% tariff rate, which is significantly higher than the 31% suggested earlier. Meanwhile, Taiwan is bracing for a 20% tariff on its exports. It's like when you're playing a game of chicken, and everyone is waiting to see who will blink first. Trump has also increased tariffs on certain Canadian goods to 35%, starting immediately. Prime Minister Mark Carney expressed disappointment, but didn't seem eager to retaliate, much to many people's surprise. It's akin to being upset about a friend taking your toy but not wanting to take theirs back. For smaller countries with trade surpluses with the U.S., the new tariff rate is 15%, while those with trade deficits face a 10% tariff. Mexico got a reprieve, with its current rates extended for 90 days to give it more time to negotiate a deal. It's like giving someone extra time to clean up their room before expecting perfection. Amazon took a hit, dropping 8.3% after announcing underwhelming growth in its cloud computing division. Other companies are also sounding the alarm, citing uncertainty about tariffs as a major concern. It's like walking into a store only to find that prices are fluctuating wildly, making it hard to plan your purchases. By the end of the day, stock indexes were down across the board. The tech-focused NASDAQ Composite fell 2.2%, leading the losses. The S&P 500 dropped 1.6%, and the Dow had its worst week since the tariffs were first announced in early April. Treasury yields also fell, with 10-year note yields dropping more than 0.1 percentage points to close at 4.218%. European and Asian stocks followed suit, with indexes in Italy, France, Germany, and South Korea all experiencing declines. So, what does all this mean for investors? It's a reminder that the stock market can be volatile, especially when faced with economic and political uncertainties. As we navigate through these changes, it's crucial to stay informed and make decisions based on comprehensive research. But here's the million-dollar question. Is Trump's approach to firing the BLS commissioner and imposing new tariffs justified? Or is it causing more harm than good? What do you think? Share your thoughts in the comments below. Markets plunge. Trump's tariff shock. Jobs data bombshell and BLS leadership crisis. Markets plunge as President Trump ignites a trade war and fires the nation's top jobs statistician. But here's where it gets controversial. The president accused the fired commissioner of manipulating job reports for political gain without providing a shred of evidence. This bold move has sparked outrage among business leaders and economists who rely on the Bureau of Labor Statistics' impartial data to make critical decisions. The question on everyone's mind: will this unprecedented attack on our statistical system erode the credibility of our economic data infrastructure? And this is the part most people miss: the potential long-term damage to our economy. What do you think? Agree or disagree? Share your thoughts in the comments below. Trade war turmoil and rising unemployment. Market dive explained. President Trump's trade policies are under fire again as global markets reel from the fallout. But here's the twist many might have missed. These latest market nosedives aren't just about tariffs. They're a collision course between economic realities and political chess moves. For those watching the markets closely, this roller coaster feels familiar. When April's Liberation Day tariff announcements first landed, analysts predicted a delayed market reaction. Fast forward to August. Trump's reciprocal tariffs, complete with new targets, revised deadlines, and strategic delays, are now igniting fresh investor panic. But what's really sparking this plunge? It's not just the tariffs, though they play a starring role. The perfect storm combines Trump's aggressive trade strategy with concerning economic data that's shaking confidence in the U.S. recovery. Two key developments sent shockwaves this week. 1. The 3-month delay ends. Trump's initial tariff pause reached its expiration date, forcing traders to confront the reality of renewed trade barriers. This timing couldn't be worse. It coincided with GDP reports showing economic growth has slowed, despite earlier hopes of a rebound. 2. Employment data shocks. Friday brought a gut punch. New labor reports revealed rising unemployment and stagnant hiring, breaking a strong streak of jobs growth that had been a political lifeline for the administration. What's critical here is how these pieces connect. Trade wars create economic uncertainty, which often leads to job market fragility. Now, with the latest figures showing unemployment creeping upward, Trump's signature strong economy narrative is being tested. But is this a temporary blip or a structural shift? Controversial angle. Some argue Trump's tariffs are a needed correction to unfair trade practices. Critics counter their self-inflicted wounds. Whether you support or oppose these policies, one fact remains: markets hate uncertainty, and this week provided it in spades. The real question now: has the trade war finally reached a point where political rhetoric clashes with economic reality? Or will the administration pivot? The answer could determine if this market dip becomes a prolonged downtrend or just another chapter in the never-ending trade war saga. What do you think? Is this the natural consequence of a tough negotiations or a misstep with global repercussions? Share your take below. We want to hear your perspective.